Stocks open up but languish in listless trade amid growing uncertainty over interest rates and growth. Metals and capital goods lead on gains while FMCG drags today.
Reliance Jio hikes entry-level tariffs for new postpaid plans which remain cheaper than Bharti's, also introduces the cheapest available family plan. The move spooks the Bharti stock.
A spokesperson for Adani Group tells CNBC-TV18 that Ambuja Cements and ACC are owned by an SPV controlled by Vinod Adani and belongs to the Adani Group. The statement puts to rest all speculations on Vinod Adani's relationship with Adani Group companies.
And oil prices slipped overnight on lingering concerns over the banking sector troubles in the US, but an OPEC report forecasting demand recovery in China has sparked a recovery.
Hello and welcome. You've tuned into Business Lunch. I'm Nisha Podar, and with me, as always, is my co-anchor Pavitra Parekh. Good afternoon, Pavitra. So yes, listless day of trade, it seems like, but we are seeing some tinge of green. So that is a good news probably at the moment. But at lunch are extremely sluggish on Nifty 50 on the flat line, but with a positive bias so far. So 17,052 levels is where Nifty 50 is, extremely flattish. Sensex also flat, but with a negative bias. And Bank Nifty also in the same zone. But what's really doing well are the mid caps. So 0.5% up, so going against the tide when it comes to the key indices. So huge outperformance by the mid-cap universe today, and that's also giving a lot of reasoning to the advanced decline ratio because of the mid-caps really performing well, and therefore the stocks in advancing side are higher than the declines. Some of the consumer stocks are the ones which are the key draggers for Nifty 50 today, but apart from that, Asian Paints, on the other hand, in terms of percentage, is the key gainer. Apart from that, some of the banks are the ones which are really dragging in trade today, Pavitra.
Oh, absolutely. And this knock on the Nifty Bank has come through in just the past couple of minutes, right? There you have it on your screen. And some of the larger names, the likes of IndusInd, Axis, HDFC Bank, these are all at the low point of the day. SBI at the low point of the day. So definitely do keep your eye out on this. The Sensex has moved into the red right now, by the way. So that is something to watch. But holding up, however, and has been holding up all through the day is really the metals pack. So some of the larger names will be up for you. The pharma index, after hitting a low yesterday, has sort of reversed and seeing a little bit of an uptick over there. So something like a Dr. Reddy's, Apollo Hospitals, Biocon is up 2.5% in quite a weak market. So those ones looking quite all right. And then, you know, you also have the entire telecom space, which is in focus. So let's actually talk about that because Reliance Jio has launched new postpaid family plans, Jio Plus. Rima is standing by at the big wall with the details on what this could really mean for industry rivals. Rima, aggressive push coming through from Bharti Airtel there.
Yes, indeed. Thank you very much for that. Let's start with the news. Reliance Jio has launched new postpaid family plans, Jio Plus. One is for $399 and the other one is for $699. The $399 plan offers 3 additional add-on connections at 99 rupees per SIM, which basically means that the total monthly charge for a family of 4 is only 696 rupees per month. 399 plus 99 plus 99 plus 99. There is also another plan which offers higher value, and that is priced at 996 rupees per month for a family of 4. Now, how do these plans compare with competition? Now, Airtel's family plan starts with 999. So the cheapest plan, which is currently available for a value-conscious family, Jio's plan of 699 is going to be cheaper than Airtel's plan of 999. But this Airtel's 999 plan will also offer you free OTT connection of Amazon Prime as well as Disney Hotstar, which the 699 plan will not offer you. The comparable plan of Reliance Jio and Bharti Airtel is actually quite similar. 996 compares with Airtel's of 999. Let's move on now from the family plans to the individual plans. Now, Reliance Jio earlier had an entry-level plan of 199. Now, for new users, what they've said is that the entry-level postpaid individual plan will begin at 299 rupees. Now, this is cheaper than Airtel's 399 rupee plan. Can this spur Jio's postpaid growth? Now, Jio has actually done quite a smart thing because the change is that for new subscribers, the entry-level postpaid plans have gone up by 50%. 199 is now 299. But for the family plans, they are giving you a cheaper alternative to peers at 696, but it's giving you lower value as well. Now, up until now, Reliance Jio has had limited success in postpaid despite their earlier plans being significantly cheaper. While postpaid accounts account for about 7.5% of the subscriber base, it's a lucrative space given the higher ARPUs. Let's talk about the brokerages then. CLSA says that although Reliance Jio's new entry family postpaid plan will renew expectations of subscriber gains, remember, postpaid subscribers are not as price sensitive. That's the key. They do not typically churn for price plans which are slightly lower. And also, Reliance Jio's price plan of 996 rupees is comparable to Bharti Airtel and Vodafone Idea's plan of 999. CLSA also says that Reliance Jio's individual postpaid tariff hike of 50% will make the entry plan comparable to Vodafone Idea, but cut Bharti Airtel's premium from 100% to 33%. Kotak says Reliance Jio's renewed aggression against our expectations of an increase in postpaid tariff is surprising, and it could delay the prospect of tariff hikes in the near term. However, Kotak goes on to say they do not expect Reliance Jio to get aggressive in the larger prepaid data segment. Here we were talking about postpaid, but in the prepaid data segment, they don't expect Reliance Jio to get very aggressive. Back to you.
All right, thanks, Rima, for getting us all those details. And telecom tariff war is never a good news for the industry players. Now it's time also for a special segment, Fin Street, and Abhishek Kothari is standing by with the details on the growth trajectory in the credit cards segment. Abhishek.
Credit card spends grew by 45.5% YOY and about 0.9% month-on-month. The spends are the second highest post-Diwali. However, credit card issuances have remained healthy. In Jan of 2023, the credit card issuances grew by 1.6% month-on-month and about 17.5% on a YOY basis. The average spends was at rupees 15,532, which is up 23.9% YOY, but a decline of 0.6% on a month-on-month basis. The average spends trend has remained on the healthier side. Let's take a look at the top 4 players in terms of their performance. So from July of 2022 to Jan of 2023, the spends market share has declined by 307 basis points for ICICI Bank, 75 basis points for SDFC Bank, but it has increased by 52 basis points for Axis Bank and about 231 basis points for SBI. The top 4 market share in spends has moved from 73.85% in July 22 to about 72.9% in Jan of 2023. This is a decline of 99 basis points. Now, credit cards market share has moved by, reduction of 155 basis points for ICICI Bank. SDFC Bank has seen a decline of 146 basis points and Axis Bank seeing a decline of 75 basis points. SBI has seen a market share gain of about 256 basis points. Hence, it can be clearly seen that amongst the top 4, SBI is the only player to see market share gain in cards as well as spends. The top 4's total market share in terms of the number of cards has moved from 69.95% in July 2022 to about 68.75% in Jan of 2023. This is a decline of 120 basis points. Over the last 4 months, amongst the top 4, only SDFC Bank has lost market share. So SDFC Bank has lost a market share of about 142 basis points when compared to a gain of 32 basis points for ICICI Bank, 46 basis points for Axis Bank, and about 101 basis point gain for SBI. In the last 4 months, with respect to credit card issuances, SDFC Bank has gained market share by 5 basis points. This compares to 55 basis point market share gain for SBI, 18 basis point gain for Axis Bank. ICICI Bank is the only lender amongst top 4 to lose market share nearly by 50 basis points. In terms of outlook, the credit card issuances remain strong. Spends have declined a bit, but with summer holidays coming up, you can expect the spends to increase. You need to watch out for the revolver rates, which are on a declining trend for the entire sector. Now, many private lenders are still giving out huge offers to get credit card customers on board. SDFC Bank has reduced its offers to customers, a trend which may or may not be followed by other players. So we will need to wait and see reaction of peers on the same.
All right, Abhishek, thanks a lot for getting us that complete picture on credit cards in the country. But with that, we do need to get into a short break now. There's lots more news and updates coming up for you in just a minute. Hey guys, welcome back. You're still tuned into Business Lunch on CNBC-TV18. Now, a spokesperson for Adani Group has told CNBC-TV18 that Ambuja Cements and ACC are owned by an SPV controlled by Vinod Adani and belong to the Adani Group. The statement puts to rest all speculation on Vinod Adani's relationship with Adani Group companies. So Vivek is standing by at the big wall with all of the details on this one. Vivek?
Well, thank you for that. The Adani Group stocks continue to remain in focus after a morning context story published on Monday, 13th March, which reported that Ambuja Cements and ACC are owned not by the Adani Group, but by Vinod Adani-controlled entities. In fact, what we've done is we've gone through the entire disclosures made in the open offer document and have independently verified that for Ambuja Cement, that the open offer document was made by an entity controlled by Vinod Adani. The disclosure reads, the ultimate beneficial ownership of the acquirer, that is Endeavour Trade and Investment Limited Mauritius, is actually held by Vinod Shantilal Adani and Mrs. Ranjaben Vinod Adani. The chart on your screen actually indicates the multi-tiered SPV ownership structure of the group. An Adani Group spokesperson actually told CNBC-TV18 that when you're talking about this particular Endeavour Trade and Investment Limited, controlled by Mr. Vinod Adani, the acquirer of ACC Limited as well as Ambuja Cements Limited, belongs to the Adani Group. This fact has been disclosed in our public offer document dated 19th August 2022. The point of concern on this is that the Adani Group had indicated in its response to Hindenburg's allegations that transactions with Vinod Adani entities did not qualify as related party transactions. And as per Indian laws, Adani Group's response on the non-disclosure of related party transactions with Vinod Adani Group entities said, and I quote, all transactions entered into us with entities who qualify as related party under Indian laws and accounting standards have been duly disclosed by us. Further, these have been carried out on arm's length in accordance with applicable laws. Vinod Adani does not hold any managerial position in any Adani-listed entities or their subsidiaries and has no role in their day-to-day affairs.
All right, thanks so much, Vivek, for getting us all those important details, important bit of clarification coming in on Adani's cement business. Let's slip into a short breather, but don't go anywhere because we'll focus on international news coming in on the other side. Fears of escalation rise after the United States claims that Russian jets collided with their drone and downed it in the Black Sea. More on that after a very short break. Welcome back. You're watching Business Lunch, and at the moment, Nifty 50 is looking flat while mid-caps have gained more momentum. Now, let's get you some of the important takeaways coming in from the CII Partnership Summit that is underway in Delhi. And on the sidelines of this particular event, our colleague Shivani spoke to Louis Brewer, who is the resident representative at IMF, and began by asking him about his views on the accident of Silicon Valley Bank collapse. Listen in.
Based on the actions taken by the U.S. authorities, this situation has been controlled. And when we look at the impact in other countries, including India, so far it's been very small, so it's not an issue that raises significant concerns. Nonetheless, financial sector issues are very sensitive, so things need to be monitored very closely.
And also, how about the Fed's reaction to the SVB collapse? And before that as well, some panelists were also saying that, the aggressive rate hikes have also led to this in a certain way. How do you see that?
Well, there obviously has been some tensions between the fight against high inflation in the U.S. and many other countries around the world, and financial stability. And what you saw in this particular case was an institution that was affected, but that had very unique characteristics that cannot be generalized. So there is a tension, and governments have rules, regulations. They supervise banks to make sure that banks have enough capital and manage their credit, interest rate, and other risks appropriately. Presumably, banks will be...
All right, that is IMF on the entire SVB crisis that we've seen play out, and also saying that global interest rates...
All right, so very important details on the international affairs and the geopolitical situation there. But with that completely out of time on this edition of Business Lunch, keep an eye out on Bank Nifty. That is the one really falling, and Reliance Industries as well. With that, it's a wrap. Thanks so much.